Hi, everyone. Good evening. Thanks for your patience and welcome to today's session on the Singapore's Supplementary Retirement Scheme, or SRS for short. So if you're joining us today, it's probably one of the few reasons. Number one, you've heard of SRS, but you have no idea what it is. Number two, you kind of know what it is, but you need more clarity. Or number three, you already have an SRS account, you are actively contributing to it, but you want to understand a little bit more about SRS. So if it's not one of these reasons, please feel free to let us know what you'd like to take out of this session today in the chat box. So just some housekeeping before we start. If you have any questions at all, please do feel free to post them. If you're on Zoom, on the Q&A function, you see at the bottom of the Zoom video. This can be any questions relating to SRS, our platform, or anything at all regarding StashAway. If you're on YouTube, please feel free to use the chat box function. My colleagues are helping with some of the Q&A, and there is also time allocated at the end of the presentation for Q&A. So please feel free to ask any questions that you may have regarding SRS, again, StashAway, our platforms, and we'll try our best to help you. Just a disclaimer that while I will be talking about some tax benefits that SRS may have, we are not tax consultants. So if you have more specific questions about your current financial situation or any very, very specific tax-related queries, unfortunately, we are unable to help you. So please do consult with a tax professional for the information that you may need that is very specific to your circumstance. So let me go over the agenda for today. As I mentioned today, it's all about SRS. So we'll start with the basics, and then we'll run through the logic of SRS withdrawals and a high-level look at its taxation rules. Next, we'll dive deeper into why just setting aside your SRS funds in the account isn't enough, and how you can actually link your SRS account to StashAway for investment purposes. Lastly, I will also be debunking some myths, so hopefully that will help give you some clarity around what SRS is before we move on to the Q&A from the audience. So before we begin, as usual, let me start with an introduction to StashAway. So we are Asia's leading digital wealth manager. We were founded in Singapore and have since expanded to 4 other geographies. So this includes Malaysia, Dubai, Hong Kong, as well as Thailand. So essentially, we're licensed in 5 jurisdictions. And as of 2021, we do have US 1 billion of assets under management. Some of our backers include Sequoia, Fidelity, SquarePeg, as well as Hamilton Lane. And we've also received numerous accolades over the years, with 2 of the more recent ones being named as one of APAC's high growth companies by Financial Times. And we've also been named amongst the top 200 global fintech companies by CNBC. So over here, what you see on your screen, we have an overview of our suite of products for our users. So you would be able to explore all this on our app. So as users on our Singapore platform, you would have access to all these products, except for those that are only available to accredited investors at this point in time and corporates. So all our products have no minimum amount requirement. We have no hidden costs, so it's just a management fee. And it's a very, very convenient tool to actually get you started or even be part of your current investment and retirement plan. So many of our products are also optimized for long-term investing. So this would fit very, very well into an SRS investing strategy, but more on that later on in the webinar itself. Now, before we dive deeper into SRS, let's talk a little bit about the massive elephant in the room, right? The biggest and most expensive endeavor that we will all embark on in our life, retirement. So when one retires, there will be a variety of sources where the funds to help sustain one's lifestyle will come from. So I do have a question for all of you tuning in tonight. Have you thought about your retirement? Very loaded question, I know, quite scary to think about sometimes, but it's something that we actually have to face, right? And also, pertaining to that, where are the sources of funds for you coming from when you actually reach retirement? So if you're on YouTube, please feel free to basically share in the YouTube chat box. If you're here on Zoom with us, please feel free to use our webinar chat. We would love to get to know you better. Okay, let's just give it a few seconds. I see a couple of answers streaming in. No? No one has thought about their retirement? Okay. So I do see that some people have put like CPF, some people have put savings, some people have put investments. So in addition to what some of you have actually shared, one thing that many people may rely on is either their pension plans or any sort of retirement schemes that they might have set up for themselves during their younger days. So today we'll touch on one of those, which again is SRS. So CPF, or the Central Provident Fund, is one that many of us are familiar with here in Singapore. It is a compulsory contribution for Singaporean citizens as well as Singaporean PRs. So as an example, if your current monthly salary is 4,000 Singapore dollars, for example, 20% of this will actually go into your CPF monthly, and then there will be some contribution from your employer, and this basically pool of funds are essentially locked up until you are 65. So for SRS, it's actually a voluntary contribution. So one common thing that we hear about is that, or rather confusing thing that we hear about is that it's only either for citizens and PRs or it's only for foreigners in Singapore. So the truth is, if you're currently residing in Singapore and you are a tax resident in Singapore, you are eligible for SRS. So the only difference between the eligibility for citizens and PRs, as well as, let's call it expats, is the maximum amount that you can contribute per calendar year. So for citizens and PRs, you can contribute up to $15,300 per year. And this is on top of your monthly compulsory CPF contributions. While for non-citizens and PRs, you can contribute up to $35,700 a year. Again, this is calendar year. An SRS account can be opened through 3 of the local banks, with the local banks being either DBS, OCBC, or UOB. And you are actually only allowed one SRS account. So say, for example, you already have an SRS account with one of the banking providers that I mentioned, you will actually not be eligible to open another one with another banking provider. So do keep that in mind, that if you already have one, you are actually not allowed to open a second SRS account. Why are we talking about SRS, and why is this an attractive option for many? So one of the main benefits of SRS, besides helping you save toward your retirement, is that your contributions are actually tax deductible. So we will talk more about this shortly. So next, as a Singaporean citizen or a Singaporean permanent resident, you can withdraw your funds penalty-free after the statutory retirement age. So here's the tricky part. If you had started an SRS account before July 2022, the statutory retirement age that is tagged to your SRS account is actually 62. If you had started your SRS account after July 2022, that's when the statutory retirement age actually changed to 63. That would be basically when you can actually withdraw your funds penalty free. So say, for example, today we are in April 2024. Yeah, we're in Q2 now. If you had not opened an SRS account and you decide, you know what, tomorrow I'm going to go to the bank, I'm going to open an SRS account, you will be locked in until age 63. If you had opened an SRS account before July 2022, you will essentially be locked in until you are 62. So for non-citizens and PRs, at the 10-year mark of your contribution, and you are still neither a citizen nor a PR of Singapore, you can actually apply to withdraw your SRS savings without penalty. Let me repeat that. So if you are a citizen or a PR, your SRS funds are essentially locked up until you reach Singapore's statutory retirement age. If you're currently an expat in Singapore, and you are actively contributing to your SRS, if at the 10th year of you contributing to SRS, you are neither a citizen nor a PR, you can actually apply to withdraw your SRS savings without penalty. In both circumstances, when you do actually withdraw without penalty, so either at statutory age or at 10 years, you will be taxed on 50% of your withdrawals. So this goes, again, across all withdrawals made after the statutory retirement age, as well as the 10th year mark if you're neither a citizen or PR. you will be actually subject to the 50% tax concession. So what does this mean? So this means you will only be taxed on 50% of your withdrawals. I know it's a bit confusing right now, but I will definitely go into detail on this tax concession later on. I mentioned a penalty-free withdrawal. Basically, there is a penalty if you withdraw before the age 62 or 63 or before the 10-year mark of your SRS contribution as an expat. So the penalty is actually 5%. And on top of that 5%, you will actually be taxed on 100% of that amount. So say, for example, you're currently a citizen or a PR. At age 50, you need to withdraw monies from your SRS account for whatever reason. You will be penalized 5% on that amount, and you will also be taxed on 100% of that amount. So just keep that in mind. So I spoke earlier about tax benefits and how your contributions are tax deductible. So let's look at how much tax one can actually save with yearly contributions. So the simulator that you see here on screen is actually available for you on our website. My colleague will actually put a link in the chat box for you to kind of explore later on. So let's assume as a citizen or PR here in Singapore with an annual income of, say, 150,000, you want to contribute to your SRS and you would actually like to know how much tax you can save on an annual basis. So assuming you max out your contribution for the year, which is 15,300, you would save about 26% on your tax bill. So you see the difference between how much tax you would pay with SRS, with an SRS contribution, and how much tax you actually pay without an SRS contribution on the bottom right of the screenshot. That's a pretty significant amount if if you sort of take that over, say, for example, a 20-year time period. What about non-citizens or PRs? So assuming the same income bracket and also one who maxes out their yearly contribution. So for non-citizens and PRs, you can actually contribute slightly more. So the max contribution for non-citizens and PRs is 35,700 a year. By contributing to your SRS, you save close to $5,000 every year on your tax bill. So that's 41% savings. It's a huge sum. Again, if you'd like to understand more about this and the tax savings, the link my colleague has just shared is in the chat box. You have any questions, again, we are available. Please feel free to use the Zoom Q&A function button, or if you are on YouTube, please feel free to use the YouTube chat box. Okay, let's consider a contribution plan. So perhaps the sum of either 15,300 or 35,700 seems pretty large, but actually if you break it down into a monthly contribution plan, it is easily achievable. You're essentially, think about you perhaps dollar cost averaging if you're also investing these funds, which is something we'll address later. So before we go there, let's kind of make a little bit more sense of the 50% tax concession, because I know that's where, it's a little bit confusing for everyone. So right here, we have Rachel. For the last 20 years, she has been very, very disciplined with her SRS contribution. So every year, she would contribute the max she can of 15,300. And over the course of 20 years, that has amounted to a total contribution of 306,000. Now she is at the age of 63. So she has two options. She can either withdraw it in one go or stagger the withdrawal across 10 years. So if she chooses to withdraw the 306,000 in one go, she can. She will, however, be taxed on 50% of that 306,000. So that means she will tax on roughly 153,000, while the remaining 153,000 can actually be withdrawn tax-free. If she chooses to stagger her withdrawals, she can do that as well. But do bear in mind that there is a max number of years that one can stagger their SRS withdrawals, and that is 10 years. After the 10 year, if you still have remaining funds in your SRS account, you would need to withdraw everything regardless of the remaining amount. Some interesting info about the tax. So with the 50% tax concession, one can actually withdraw up to $40,000 a year tax-free. So how does this actually work? So in Singapore, the minimum annual income before an individual can be taxed is above 20,000 per annum. So if your withdrawal amount every year is 40,000, you will only be taxed on 20,000, which is 50% of that sum. And that amount is actually not taxable in Singapore. So that's one strategy for you. So I understand that this may sound a little confusing. So let's look at the summary of the withdrawal logic. for SRS. So in the event of a premature withdrawal, with premature meaning for citizens and PRs withdrawing before the statutory retirement age, and for non-citizens and PRs withdrawing before the 10th year of their SRS timeline, there will be a penalty of 5%, with 100% of said withdrawal amount being subject to tax. If you withdraw at the statutory retirement age or on the 10th year mark as a non-citizen or PR, the tax will be on 50% of the withdrawn amount. Once everything has been withdrawn, or if you choose to close your SRS account, basically you cannot reopen your account. But if you withdrew before the maturity date, let's call it maturity date, and you paid the 5% penalty, you can actually top up your SRS account again. As I mentioned, you can withdraw up to 10 years tax-free with the remaining sum in your account, with 50% of the remaining sum of your account being taxed at the end of 10 years. So what you see here is essentially how you can actually strategize your SRS withdrawals over 10 years once you're either at the statutory retirement age or you're at the 10th year mark of your residency here in Singapore as an expat. So in total, if you think about it, you actually be able to draw up to 400,000 tax-free. Again, this is assuming that 40,000 a year is sufficient for you. Then this is actually a strategy that you can go by. Now, you're probably wondering, okay, I don't want to pay tax today, but if I do withdraw retirement, I still need to pay tax. So is it really worth it? So let's think through a couple of scenarios, okay? So the first one, let's assume you're currently a citizen and PR in Singapore. Over the course of 20 years, which is, I guess, statistically the average amount of active contribution years, you contribute a total of 306,000, right? So that is without any sort of investment, it's just purely into the SRS account. But let's just assume that you decide to invest this sum of cash, and average over the course of 20 years, you get an average of 9% returns per annum. 9% sounds like a lot, but it's actually the average return from the S&P 500 over the last 20 years. So assuming, every year you contribute the 15,300, you put that into the S&P 500, over the course of 20 years, the 306,000 that you had actually contributed, at the end of 20 years, you would actually have a total sum of 861,000. And if you see here on the screen, the accumulated returns itself is about 556,000. So this is due to the beautiful effect of compounding on your contribution. So in addition to this, the tax you would have saved over 20 years amounts to about 35,200. So this is, of course, assuming the IRAS rates and your tax bracket as well as income doesn't change. But obviously, circumstances do change, so the numbers might differ. But let's just go on this assumption for now. So if your investment has become so big, you're probably thinking about ways you can withdraw whilst minimizing as much tax as possible. So say you decide to withdraw over the course of 10 years. So basically 861,000 over the course of 10 years. That means you're withdrawing about 86,000 a year, and you're taxed on 50% of that. 50% of 86 is 43,000. So at 43,000, based on the current IRS sliding tax rates, you'll be paying about $550 in tax per year. Again, this is based on today's income tax rates. That means over the course of 10 years, you actually only be paying a total of 5,500, which is close to about 28,000 less than what than if you had not set aside funds in SRS. Assuming that in the unlikely scenario that you decide to withdraw all 861,000 in one go. So I say unlikely because I don't know if anyone would ever need close to $1 million in one go, but I mean, you never know, right? Circumstances. Let's just play the scenario out. So by withdrawing everything, you will be paying tax on half of that, and half of that will be about 430,000. So based on the current income tax rates, that will be about $67,000 worth of tax that you will be paying. So I understand if you look at the math, and if you do the math, that's about 32,000 more than you would have paid. But with the additional tax that you had saved in the very beginning, which is basically an additional $1,760 roughly that you have a year, you could have potentially invested that. So let's just assume that you invested that in something slightly more conservative. And you decide to invest the additional 1,700 that you have into a cash management solution. Let's use StashAway Simple Plus as an example, right? So Simple Plus, we currently offer a yield to maturity of 4.6%. So over the course of 20 years, let's just average it out at roughly 4%. So it means in 20 years, through the power of compounding, that 1,760 a year that you set aside in a solution that gives you 4% will grow to roughly a nice sum of 52,000. That means the accumulated returns from actually investing that additional 1,700 a year over the course of 20 years is about $17,000. So if you want to add up the 17,000 accumulated returns from the additional $1,000 that you save every year from tax, and the 500,000 accumulated returns that you get from actually investing your SRS funds, the total accumulated returns you will get over the course of 20 years is actually a really nice sum of roughly 573,000. So you're building a great nest egg while saving tax on the other hand. It's almost like a win-win there, if you ask me. But let's also look at this for non-citizens and PRs who are still Singaporean tax residents at the end of 10 years. So assuming for 10 years, you max your contribution and put aside 35,700 every year. That means in 10 years, the total amount you would have at the 10-year mark, after also investing, say, for example, in an asset that gives you 9% per annum, you would have a total of about $581,000. So total accumulated returns is about 220,000. And over a 10-year period, you would have saved about 51,560,000 in tax. Again, this is going on the assumption that your income doesn't change, your tax bracket doesn't change, and I guess the regulation around this does not change. Now let's look at two withdrawal scenarios. So let's assume you withdraw tax-free over 10 years, which is what I mentioned earlier on, right? So if you decide to withdraw 40,000 per year, you can potentially withdraw over the course of 10 years tax-free. So after the 10th year, you would have to pay tax on 50% of the remaining sum. So, at the 10-year mark, I have 581,000. I withdraw 40,000 per year for 10 years. So at the end of it, at the 10-year and beyond mark, I would have a remaining 181,000. I have to pay tax on 50% of the amount. So the tax I would have to pay on the rough $90,000, it's about $4,500. So that means the total tax you would have saved is 47,000. Assuming you want to withdraw all this in one go, you would also still be paying less tax at the end of it. So if we were to summarize this, by setting aside your SRS funds, you would have saved about 51,000 in tax over the course of 10 years. But obviously, again, this is based on an annual income of 150,000, sorry. So please do your own calculations. What I'm here to do is I just want to share the logic of this with you. And from there, you can make the decision as to whether or not this actually would actually make sense in your financial plans. Okay, so it's over the course of 10 years, you would save about 51,000 worth of tax. After that, you can choose to either stagger your withdrawal tax-free for 10 years, then only pay 4,500 for the remaining sum, or you can withdraw all in one go if you want to, if you wish to, if you need the cash, obviously, and you will still be actually saving a good amount in tax. So yes, while you're still paying tax at the end of it, you are going to be paying way less, and also generating accumulated returns as well. Now, what if, say, for example, as an expat, you have moved away and on the 10 year of your SRS contribution, you decide to withdraw. So let's go by the scenario where despite having moved away, you choose to continue contributing to build your nest egg and invest. You can do that. Singapore allows you to do that. At the 10th year, you decide to stagger your withdrawals. You would still need to pay tax on 50% of the remaining sum. So the current regulation is that you either pay 15% or the income tax rate on the withdrawal amount, whichever is higher. So this is also applicable if you were to withdraw a whole lump sum, regardless of either scenario, you will actually still be paying less tax than if you had not set aside the SRS funds. Again, let's think through two scenarios. I do also want to caution that there is a withholding tax of 24%. And withholding tax is actually not tax you pay. When you withdraw, 24% of the taxable amount will be withheld by the bank first. Once the total tax has been paid, and if there is excess, you will be refunded the remaining amount. Again, the withholding tax is only for non-tax residents at time of withdrawal. So in summary, for non-tax residents, you will save 51,000 over the course of 10 years. And depending on how you choose to withdraw, you will be saving tax on either the total amount while also growing your nest egg. Again, the T and C's of this may change in the future, but based on current guidelines, this is how you can look at tax savings for now. If you have any questions, I know this was quite loaded. Please feel free to use the Q&A chat function. At the same time, if you're on YouTube, please use the chat box, and my colleagues will actually push the questions over here, and we'll get to it at the end of the webinar. So if this is something that has caught your attention, then that means that you have the discipline to be consistent with your SRS contribution, which indicates that chances are you're an investor with a long-term mindset. However, if you were to just allow your SRS to sit in the SRS account, you would only be yielding 0.05% per annum. Yes, you heard that right, 0.05%. But there are solutions for you to maximize the growth of SRS to generate compounding returns. So for example, right now at StashAway, Simple is offering, we have Simple Guarantee that's offering up to 3.8% per annum. And if you're okay with taking some risks, our highest risk general investing portfolios has returns of 16.5% in 2023. Let's take a step back. So as an investor, you are able to invest your SRS funds in the following asset classes. So you're not just beholden to one type of investment like unit trust as an example. You can actually diversify across the market. And given that with SRS, you are taking a longer term view, given the withdrawal timeline, if the solution and risk suits your comfort level, you can invest in equities like the S&P 500, dollar cost average in every month, week, or bi-monthly, for example, depending on what you're able to, and watch the investment grow from now until you retire. Of course, as with all investments, there are risks, so do ensure that you understand what you're getting yourself into first before taking the lead. So what should an SRS strategy look like? SRS investment strategy, excuse me. Well, first of all, it should be optimized for long-term investing. That's because of the timelines that exist. So assuming you're only starting today, you may have a timeline of anywhere from 10 to 30 years before you can actually withdraw penalty-free. This means you can perhaps take slightly higher risks, perhaps portfolios with larger exposure to equities, or maybe even a direct exposure to equities itself, like the S&P 500 as an example. Next, how can you think about your SRS contribution, and how does one actually prepare for this? So first is to ensure that you set aside a budget. If you remember my monthly contribution slide earlier on in the webinar, depending on the max amount you can contribute a year, you can break it up into different contribution amounts each month. So set aside a budget, and the beauty is that there's a fixed amount and a fixed time horizon. So you don't need to stress yourself out too much with this. And like most of our investment decisions, be sure to decide on a risk tolerance, right? So think about what you know, think about what you don't know, decide what you're comfortable with and what more you'd like to find out. The good news is you can actually invest your SRS monies with StashAway products. So to start, if you do decide that you're not ready to invest yet, putting it into our cash management solutions is also a good bet, because as of today, our projected yield for both Simple and Simple Plus is higher than the SRS account of 0.05%. When you're ready to take more risk, you can invest in our core portfolios, which includes our general investing by StashAway portfolios, as well as the flexible portfolios that allows you to create a portfolio to gain exposure to ETFs like the S&P 500, the Dow, or Nasdaq. Then lastly, we have our thematic portfolios that allows you exposure to tech companies, for example, blockchain companies, healthcare companies, and ESG-related organizations. So the nature of these portfolios also make them higher risk. Ultimately, you are free to explore this on our platform and then decide which of these portfolios make the most sense to you. I do see a couple of questions in the chat box where they're asking if we can help. We can actually help you as well. So if anyone has very, very specific questions about, hey, I'm in this circumstance, I need a little bit more help deciding and understanding your platform, feel free to reach out to us at support@stashaway.com. But moving on, as an example, these are the returns of our general investing portfolios in 2023. So as you can see, the higher the risk you take, the bigger exposure you'd have to equities, which benefited significantly from last year's rally. And these are the returns of our thematics portfolios in 2023. As I mentioned, they are generally higher risk. So the swings that they see up and down can also be more significant. But if you take a longer term view, as you should, since we're talking about SRS, you should be able to perhaps take a little bit more risk and weather the volatility that comes with investing. However, don't just rely on past performance to form a judgment. So make sure you understand the risk that you're taking, that you're comfortable with the potential swings that may come from any sort of market movement. And remember that long-term investing, in the long run, the volatility will always smoothen out. And any sort of volatility that you experience in the short term will eventually turn around. These are two examples of StashAway's general investing portfolios. So with a more conservative portfolio, you would have a higher exposure to cash equivalents and fixed income, while a higher risk portfolio actually gives you a larger exposure to equities. So we do believe in diversification and not for you to have all your investments in one basket. So that does a balance the volatility. And this doesn't just apply to SRS investing. This applies to all your investments. Let me quickly run through the concept of diversification if it's something new to you. So why should we diversify? Number one, it helps in reducing risk. So assets like bonds and equities have traditionally moved opposite of each other, meaning that if equities are going down, bond prices have traditionally moved up and vice versa. This means that if you have two of these in your portfolios, your portfolio swings will not be as rough as compared to if you had only one exposure to one asset. So this allows you essentially to experience much more steady returns in the mid to long term. Also, with different assets in your portfolios, you're also allowing yourself a much broader exposure to the market, and it also helps reduce concentration risk into just one asset. Let me just quickly run through how you can set up and connect your existing SRS accounts, if you have, with one of the banks to StashAway for you to start investing. So what you see here on your screen is when you actually choose to set up a portfolio, this is the screen that you will be led to. Once you're here, you can click on the option to deposit from your SRS account. Once that is done, you will go through the same process as creating a portfolio on our platform. Do let me and my team know if you need more help with this. Once that's done, you will actually see this SRS portfolio on your homepage. So as you can see here in the circled portion, there is a little SRS bubble, so you know which are your SRS accounts. Click on this portfolio, which would then lead you to a deposit plan page. There, you can choose to schedule either a recurring deposit, meaning every month a certain amount will be debited from your SRS bank account to the SRS portfolio. We highly encourage this, of course. And depending on which one you click, a one-time deposit or a recurring deposit, you would be led to this next page. So from here, you can click deposit at the bottom, which would then lead you to the next page where you have to actually input your SRS bank account information. Once that is done, you can actually schedule your deposit by inputting the amount you intend to deposit for this point in time. Before proceeding, there will be a confirmation page for you to reconfirm your details. So please do remember to ensure that you have sufficient funds in your SRS account to avoid this request actually being rejected by the bank. Once that's done, you can click confirm and you should be good to go. If at any point you encounter any issues with this, our team is available via WhatsApp, support@stashaway.com, and we're also just a phone call away. Now, before we actually move on, let me help to debunk some myths about SRS. So this is largely based on questions that we get from some of our clients. We do realize that there is a gap in information about what people think SRS is and what it essentially really is and how it works. So let's go through 4 of the more common myths of SRS. The first is we often get told that people are under the impression that only a certain segment of people are eligible for SRS. The truth to this is that all Singaporean residents are eligible for an SRS account, regardless of whether you are a citizen or a foreigner. The only difference, as I mentioned earlier on in the webinar, is the contribution amount. So as we discussed earlier, citizens and PRs can contribute a maximum of $15,300 per calendar year, and non-citizens and PRs, you can contribute up to $35,700 per calendar year. The second myth to debunk is that we do have users who write in and who are under the impression that SRS accounts are only for a slightly older demographic. As long as you are a Singapore resident over the age of 18, you can start an SRS account. It is never too late, nor is it ever too early to start saving toward your retirement. Please remember that. The third myth to debunk is that some people think that they can have multiple SRS accounts. This is entirely false. As I mentioned, you are only eligible to one SRS account, but you can have multiple SRS investments. So an SRS account is one that you open with, one of the 3 local banks, DBS, OCBC, or UOB, depending on who your preferred banking partner is. If you had opened one with DBS, for example, you would not be able to open another SRS account with UOB. But for SRS investments, you can have various investments, but the source of funds has to come from your SRS bank account. So for example, you decide to invest your SRS funds with StashAway. You can also have another investment account with, say, for example, another banking platform, another banking provider, so another investment platform. Or you can also have multiple investment portfolios in StashAway. So SRS investments, you can diversify. SRS bank account, you're only allowed one. This last one is also one that a lot of users get confused about. If you decide to switch your investment provider or move your funds from one investment portfolio to another, you will not be penalized as it is not considered a withdrawal. So for example, say you have an investment account, SRS investment account on the StashAway platform. You've made some cash. You decide, I want to withdraw from here, and I want to put it into slightly higher risk portfolios with StashAway. By virtue of you actually withdrawing it and it going back to your bank account, SRS bank account, and you deploying the funds from your SRS bank account, once again, you will not incur any sort of penalty. A penalty only happens when you withdraw from your SRS bank account. So again, let me just repeat this. Let's say your SRS funds are invested across 2 investment platforms and you decide to consolidate all your investments into one platform. Selling your investment in platform A and transferring it to platform B is okay. You will not be penalized for this action. However, if your SRS bank account is with OCBC, for example, and you want to withdraw from the SRS bank account to your existing savings account, this is when you would have to pay the penalty. So I hope this has actually helped you understand SRS a little better. Right now, I'll just move on to Q&A. If there are any questions, please feel free again to put them in the Zoom chat box. If you're on YouTube, please feel free to use the YouTube chat box. While I wait for questions to stream in, if any one of you have any questions regarding StashAway's platform, how I can think about my SRS portfolio, if you want more direct support, again, please feel free to reach out to us by phone or email at support@stashaway.com.